What's up, traders? Welcome back to the Trade with Kobe channel. So today we'll be looking at supply and demand. Before we proceed, I would like to remind you that you should subscribe to my channel. Okay, so that whenever I drop a new video, you'll be the first to get it. Okay, so today we'll be looking at supply and demand, how to identify supply and demand, and the best way to use it. Okay, so now what is supply? What is demand? Just like you have the knowledge of support and resistance. For example, if you have support, a support line is where you expect markets to stop falling and start making a high, right? Support tallies with demand. At every support line, there is a demand zone. While resistance, resistance is the line where you expect price to stop rising and start making a low, right? So resistance tallies with supply. You see how they relate. The only difference between supply and demand and support and resistance is that when you are talking about supply and demand, you are not talking about a straight line. We are talking about a zone. And for you to draw your zone, your support or demand zone, you need to make use of the rectangle tool. Okay, you click here where you get the tools, then you keep scrolling until you get the rectangle. It's here, right? You click on it. So whatever you want to draw, you draw it on your screen. Okay, so now I'm using the Euro JPY charts. This is applicable to any chart and any financial asset class you are willing to trade. Sorry, you can apply this knowledge to any financial assets, be it cryptocurrency, forex, stock, whatever you want to trade. It follows the same principle. Okay, so first of all, let's start with supply. Supply always leads to a fall in price, right? It always leads to a decrease in price. The reason why market is falling at this point here is because markets met huge supply, right? The reason why market fell at this point because there is huge supply. Okay, so now at every point in the market, there is supply and demand at every point. Everywhere you navigate through the chart, you see supply and demand. So as traders, it's our duty to filter out the noise and find the best one to trade from. Like, we don't want to be trading every time. We don't want to be trading from everything in the market because at every point in time, the market is doing something, right? But we just want the market to suit our own like our own standards for us to take a trade. Okay, so first of all, how do you identify a supply? Okay, for now I'll just be drawing the zone, um regardless if it's played out or not. Okay, so this is how you draw a supply. Okay, so the reason why supply and demand is different is because supply and demand is not a straight line. It has to do with a zone. Look at, for example, here we have a consolidation. This whole consolidation here is a zone, right? This whole consolidation here is a zone. Now markets do not just consolidate, it's consolidated and then it's broke downwards, leading to a break of structure, right? If you check here, you see that there is a break of structure. Markets broke this, right? So it broke the previous low, making it that okay, this is a confirmed supply zone. Now you see what market did after markets broke downward, markets came up, entered into the zone, absorbed the supply, came down, met a level of demand, then went up forward again. Okay, so let's look for other examples of supply. Okay, let me use this. Okay, see, this is a good example of supply. Right, you know why? Market was consolidating around this place, consolidating here, then broke downward, led to a break of structure. If you see, markets broke structure here, right? Now Let's see what happened. Good. So as you can see, markets came back to that zone of supply, tapped into it, absorbed it, and went above it a little here before falling down, then rising and eventually cutting through it. So in this case, it is because demand that is in the market is higher than the supply present. So whenever there is high demand in the market, supply zones will always fill. And whenever there is high supply in the market, demand zones will always fill. This has to do with your market structure. You know, you have an uptrend and a downtrend. In an uptrend, which side of the force is more? Is it supply or demand? You should know it is demand because market is always going high, breaking the supply zones. And in a downtrend, supply is in control, right? So now, since we have seen a basic way to mark out supply zone, let's look for demand zones. Okay, there is one looking at me here. It's a good example. Market was consolidating here, broke upwards, led to a break of structure. Market came back, dipped into the zone, and boom. You see? Okay, let's look for other examples of demand zone. This is this a good example? It's also a good example, but I want another example. I want another one, another one, another one, another one. Okay, this is another example of a supply zone. Look how market was consolidating around that place. Another good example. See how the reaction. Okay, good. This is an example of a demand zone. Okay, you see how markets reacted to the demand zone, then before eventually breaking below. This is I just used the lower time frame so that I can see more examples to use. If you go to the higher time frame, the picture is more solid, but you have lesser examples. Okay, so I think I've seen a demand zone here. Okay. Okay, now you see how market also respected this demand zone. So before eventually breaking through it. So as traders, you will learn up to a point where you will know which force you should be trading. For example, when the market is in an uptrend, you should not be looking to short the market in a uptrending structure. You get, so all this knowledge you are getting, you just have to like confluence them together to build the best trading idea for yourself. And also it has a lot to do with your own practice. You have to practice to find what works for you and what does not work for you. Okay, now having touched supply and demand, there is something I want to talk about: order block. So an order block does the same thing that a supply and demand does. Order block does the same thing with a supply and demand. But the difference is that order block does not need to be a range. Order block does not need to be a range. If you have a supply and demand, this is how a supply and demand looks like. Let's say a demand zone. And before breaking, then coming back, right? This is how a demand zone looks like. But an order block will look like this. Okay, so pardon. Okay, now the difference is that instead of it being a range of candles, order block is simply maybe one, two, or maximum, from my own testing, a maximum of three candles. It's possible that when you go to a lower time frame, you find more than three candles, but from my own idea of the market, I prefer my order block to be a maximum of 3 candle, a minimum of 1 candle. Okay, as in the case of this is a demand zone, right? Market was ranging, market broke structure and came back to tap into the demand zone. In the case of order block, market made a sharp downward move, broke structure to the upside before coming back to tap towards it, before coming into it to tap into it, then moving ultimately upward. So that's the difference between a order block and a zone. So as in the case of demand zone, a order block that does the work of a demand will be a bullish order block, and a order block that does the work of a supply will be a bearish order block. Now let's go to our zones and start limiting and start making each zone. Let's be making them an order block. Let's turn them into an order block. Here, there's no clear order block here, but I'll be using this. Okay, I'll be using that. No clear order block, but that can work. Okay, here you can see. Okay, that's sharp down move before the up move. Okay, let's look. As in this case, to be this, right? The last candle before an opposite move. As in case of a bullish order block, it will be the last down candle before a sharp up move, while a bearish order block will be the last up candle before a sharp down move. Okay, here the last up candle before a sharp down move. Okay, here also the last up candle before a sharp down move. I can decide to use this and I can decide to use this as well, right? So just have to do it with you testing. Okay, so that's how to mark out an order block, right? Sorry, that's how to mark out an order block. Okay, now you might be wondering what's the difference between an order block and a zone. When you use an order block, it gives you a smaller zone to work with. For example, let's say I want to enter a trade with this order block. I want to short from here. I want to short from here. I'll be putting my stop loss. Yeah. Let's say I'll be targeting where. Let's just target. Let's target this place. Okay, I would have targeted this place. Yeah. Okay. So the other block, this is shorting from the other block. Now let's short from the zone. If I want to use a zone, it's very close. Very close. Okay. This is still very close to the other block, but let's see. Okay, now I want you to focus on this risk to reward ratio that is written on the position tool. For using the whole zone, I have a 4.52 risk to reward ratio, while for using the other block, I have what 5.26 risk to reward ratio. Okay, let's go to other zones. Okay, so let's say I want to be shorting from here. this place. Though the trade would have lost, but I just want to bring out a point. I want to point something out. Okay, so this whole zone, right? Yeah, this is a good point. Okay, good. Now compare these two. If I was waiting for the order block, I would have lost. If I decide to use the supply zone like that, I would have won the trade, right? I would have won the trade. At least I would have made profit from the trade, right? So this is how order block and demand zone differ. In terms of risk to reward, it means that if I'm risking $5 on a trade, if I use this order block, it tends to give me more, tends to give me potential, like a higher return than the demand zone or supply zone. In this case, let's say the trade of this order block, I made profit with it. If I use $5, I'll be getting over $30. If I use $5 for this demand zone, I'll be getting less than $10 because the risk to reward is less than 2. So I'll be getting less than $10. So, but the thing is that when you use an order block, you end up losing trades. Like you end up missing a lot of trade. For example, you might have just missed out here, right? You have missed out from there. You end up missing a lot of trade. But when you hit trades, it gives you higher return. But when you are using a zone, you lose more. Like you lose more money. You lose more money than how much you'll be losing on with an order block. But let's say you are a kind of trader that you have a fixed risk that okay, per trade, oh, I'm going to risk only $5. If you are risking $5 on every of your trade, when you use a zone, you won't be able to meet up with the profitability of a person that is using an order block. If a person using an order block always gets 5 times of their risk anytime they trade, and a person using a zone gets, let's say, 2 times of their risk anytime they trade, for that person that is using an order block to be more profitable than the person using a zone, it will be very easy. But for that person using a zone to be more profitable than the person using an order block, it's almost impossible. But the goal is not to compare yourself with other traders. The goal is that you should go out there, you should backtest these things, you should test it out, you should check which one works for you better. If the zone works for you better, fine, you'll be profitable with proper risk management. Focus on yourself. And if you find out that the other block works for you better, fine, you can work with it. Okay, so that will be all on this video. Thank you for staying up till this time. I hope I didn't waste much of your time. Okay, if you have any question, don't forget to drop it in the comment section. Also encourage me by liking this video so that YouTube can recommend it for more viewers. Okay, so thank you. Have a nice time.